All right. Everyone, welcome to the Web3 VC pitching sessions hosted by yours truly, InnMInd. So we are actually an ecosystem for Web3 founders, VC funds, angel investors, and service providers in the Web3 space. Quick update. Recently, we launched our connection hub, where you can directly request to connect with anyone and obtain their calendar link or DG. So we don't want to be the middleman. You won't have any human interference. So you can simply request through the platform and then get access to these. So in case if you don't have an InnMInd profile, go right now, create a profile, and we have a dedicated support team to help you through the process as well. And for those who are new today, here's a quick rundown of what we've got in store for you. First of all, we will start off with quick VC introductions and then move on to the startup pitches, where each founder will be given 5 minutes to pitch their product, and followed by engaging feedback from VCs. As always, I like to keep it very open. And VCs, please ask the hard questions so that we all can learn from each other. And those who are watching us on YouTube, please feel free to shoot your questions over in the chat. And don't forget to like and subscribe and support us and the founders. Great. And so let's just start off today. We have Valentina, who actually joined us today for the first, the first participant to join. So here you go, ladies first.
Thank you. Great to meet everyone. My name is Valentina. I am joining here from North Carolina in the USA. I am a partner at AQN Ventures. We are the key venture studio in the Duke University ecosystem, where we support Web3 innovation, not just for Duke students, but beyond. And we can, connect and expand with the alumni network, the faculty network, and just all the resources that we have at Duke University. So excited to be here.
Thank you so much. Thank you so much, Valentina. Next up, let me give the mic to Vincent Lee. Sir, it's all yours.
Great, thank you, Abdul. My name is Vincent. Hi, everyone. Very nice to be here. I'm the founding partner of Adaverse, with Web3 venture studio and accelerator, focusing on leveraging blockchain technology in the real world and solving real world issues. We have invested in from Asia, from US, from the Africa, and also now we're expanding to Middle East, Saudi especially. Right now I'm in Riyadh office. Happy to learn from all you guys. Thank you.
Thank you so much for joining us today, Vincent. Next up, I would like to give the mic to Peter from Kaizen.Finance.
Oh, hi guys, nice to meet you all. We as Kaizen, as you may know, it's a token launch platform. We supply all needed solutions to run your crypto project smoothly. We also do incubation, acceleration, help project to fundraise, and a lot of other stuff. Happy to be here.
Thank you so much for joining us, Peter.
Sure.
Next up, we have Sebastian Davies on the house. Sebastian.
Hi, everyone. I work for Aqua Now's investment arm. So Aqua Now is we provide liquidity and trading infrastructure for financial service businesses to enable crypto on their platforms. And we have an investment manager that I work with, and we've got a venture fund there where we write pre-seed and seed checks. Also, we've just launched a market making business as well to help get recent token launches listed on some unique retail platforms in some of the countries that we operate. Happy to be here.
Thanks, Sebastian. Cool. And next up, we have Karan here. Karan, can you introduce your fund?
Hello, am I audible?
Yeah, you are right now.
Yes, actually, I got invited as a startup, not as an investor. Yes.
I actually introduced you as an investor. I thought you're an investor.
Yeah.
Okay, cool. Thank you for joining us, Karan. Maybe you can actually listen to the pitches over here, and next time I will let you know how exactly that you can pitch your startup as well. Okay.
Okay.
Perfect. Thank you so much. Perfect. And I think let's just start the pitches right now while others join later on. So first up, we have Dr. Paul, where he has a meeting. So we are actually helping him pitch first, and then Marisa, you can actually follow up next after him. So Paul, you have 5 minutes to pitch right now, and your time starts whenever you're ready. You're on mute.
Oh yeah. Now it should work. Do you hear me well?
Yes, I can hear you.
Yeah, fantastic. Yeah, thank you so much. Yeah, hello everyone. Thank you for the opportunity to pitch today. My name is Pavel. I'm Dr. Pavel Vinitsky. I've been a serial entrepreneur and business strategist and visionary for over 20 years. I also have my PhD in MBA, and I'm founder and CEO of Synexis. For the last 5 years, I've been working with startups, and what I found intensively networking, talking to hundreds of investors, founders, I've repeatedly heard and identified the same fundamental issues that are broken in the industry. Then I've made the data-driven research using trusted resources like PwC, Harvard, and others. And what I found is that, first of all, there are conflicts between co-founders. No matter how they are involved in the project, how they believe in that, due to unequal involvement on the long run, they come to decrease of productivity and loss of commitment. And that leads to the breakup of the companies and for sure the red flag for investment. 65% of startups break up because of founder conflicts is one of the reasons. Second thing is the often neglection of the IP registration, licensing, and protection due to budget constraints, due to high costs for lawyers, and underestimation of significance of IP. But there should be the protection of the startup IP from the very first day without the consistent need for lawyers, and it should be done easily. But because up to 90% of startups depends on the region, they mismanage or poorly manage their IP. And it leads to problems with fundraising again, and risk to get royalty claims and get the problems with that IP can be stolen in the future. So the other big piece is the reporting and communication with the main stakeholders, specifically investors and partners. And that leads again to lost opportunities, and all that together leads to a situation when investors, they don't have lack of transparency in the companies they invest money in, or they choose to invest their money. And it is why I founded Synexis as the platform, cost-effective platform for the startup ecosystem to solve the problems that I mentioned and increase chances for startups to fundraise and grow. So we provide the single effective platform for managed transparent relations between founders, provide a liquid distribution of equity, elevate stakeholders' relations, and protect intellectual property. And based on that keep investors in the loop, making an autopilot, and we use for that blockchain, ZKP, and AI technologies. So we created, first of all, the new dynamic liquid model for equity distribution that is based on the real commitment of founders. The second piece we provide for the startups is the protection of inbound IP. What I mean under that is the copyright and know-how specifically that is hard to protect. So no matter it's employees, contractors, founders, or freelancers, we help to get all inbound IP protected, as well as the outbound IP. So where we share ideas, innovations, know-how to the third-party people, it should be protected as well. So we assure that it's kept inside the company. We also use AI to generate and verify the agreements and all necessary documents to decrease the legal costs for startups. And finally, based on all that, we provide the possibility for founders seamlessly report all the things to the investors. And what we provide to investors, based on all this information, we create the transparency score and transparency index to help to find trusted opportunities and mitigate the risks. The next thing, we provide the health state reporting based on the team management stuff, based on the financial reporting and the IP reporting. So our goal is to provide investors with a seamless tool to understand what's happening inside the companies before due diligence and after making the investment. So we have a fantastic team to do that. I told about myself. We have a great development team led by James from Canada, 7 years blockchain development experience. Arseny, DevRel and Gnosis chain, helping us with Web3 infrastructure. And we have AI team starting working on our next round, leading by experienced AI developer Sergey. And we have partners in Silicon Valley and Portugal on the legal sphere as well, top companies. We operate on the corner between legal B2B SaaS and venture capital with a great fastly growing market. We're going to reach 50 million in revenues in 5 years term. We have a very straightforward business model. It's subscription, tiered one for different stages of startups. We provide free entrance for investors now for the moment. We have a freemium model for startups as well. And we have on our go-to-market strategy, we partner with VCs, accelerators, and incubators to make the products fastly go into the market. We have a very fragmented competition. I will be glad to discuss about the things on the Q&A. And yeah, where we are now, so we are launching now. We have a number of partnerships set up. We're launching MVP. We started early sales. We have a number of partners, so secure strategic partnerships done. Full MVP is end of December and January. We secured our 200K angel round, and now we look for partners, accelerators, incubators, and VCs to make this big change for the ecosystem now, to make it transparent, to make it healthy, and yeah, so to help us to make more startups successful, more investors thriving, and give more value to the world with that. I will be glad to answer your questions and continue the conversation.
Thank you. Thank you so much, Dr. Paul, for a great pitch. Let me open questions to investors. Please shoot your questions to Paul, please. You can unmute yourself.
Let me kickstart. Thank you, Paul. So very brief questions. How do you leverage the blockchain technology here? And is there any plan for tokenization, and how do you leverage the tokenomics? Thanks.
Okay, yeah, step by step. For now, we're raising equity. So as the first stage, we will work with the token, but on the later stages. For now, it's we don't think that it's must have on this stage. With blockchain, we work on several ways. So first of all, we're tokenizing the IP. So we make the IP bundles, we call it like that. So when we onboard any kind of stakeholders in the platform, we make the KYCs or KYBs, depends on who we're talking to. And then once the IP created, we use decentralized storage for keeping the original work stored. We add their legal bundle with the KYCs, with the employer's contracts, with the copyright transfer or know-how, fixed know-how authorship. But we make it all as a secured know-how bundle that is possible to open partially with ZKP if it's necessary to transfer somewhere, or we use multi-sig to provide the opportunity for example, for investors or founders keep managing that. It's for IP, and for the documents, for sure, we use blockchain as the main notary tool. So all kind of documents, you don't need any external services to register the information in our platform.
Did it answer your question, Vincent? Cool.
Yeah, thank you.
Maybe others? Yeah.
Hey, Paul. I know with these early stages, like financial forecasts are always really hard, and but I always think it's a good way to kind of get inside the mind of the founders when they kind of talk about some of the numbers they put out there. So when you talk about $50 million in revenue in 5 years, if I just kind of like assume the mid range of the subscription service that you've got, that's like a little over 2,500 new startups a year, or like almost 250 a month. And so I'm just kind of curious, right? Like that's totally fine. And I got these numbers are not going to be what they are, but tell me, like, how do you guys when you think about a number like that, how do you plan to like go from where you're at now in beta to like getting ready to onboard like on a straight line the 250 or so new startups a month?
Yeah, that's fine. That's a great question. So when we started talking about the things, we had our trajectory of growing. So with partnering with accelerators, making our direct sales and B2B sales and that stuff. But the goal here is to grow through the ecosystems. So in the last months, we got fantastic traction talking to blockchains, talking to like tech hubs, universities, large accelerators, and that is the way how we're going to grow fast. Because if, once we are onboarding, for example, we were talking to, for example, in one of the free zones with Dubai that has thousands of startups there, techno hubs in several countries already, that in each of them there are, again, from 1 to 2,000 startups in each. So the goal is here is to making strategic partnerships with the ecosystems, and that will be the way of our exponential growth. Did I answer your question, Sebastian?
Yeah, for sure. Appreciate it. Thanks.
Thanks. That was a great question.
And a little more thing, that our goal is to be as a part of perks programs of accelerators all over the world as well. So we provide freemium entrance for accelerators. We provide educational aspect. We create the workshops for accelerators, and we provide the free listing as well. So startups can easily just create account with us and be listed. But if they would like to get all additional features as transparency index, liquid vesting, and provide all these reports for investors, they will need to make the paid accounts. So the way is for investors to provide the very actualized data. And the startups that will be on the platform, if they don't update their information regularly, they are kicked out of the index. So comparing to other platforms where you get a lot of investors and startups, but very outdated information about them, here you will have only actual data. So it will be the source to find real opportunities that actual for the moment with the trusted data, because it's immutable on blockchain. So it's not possible to cheat it.
Great.
Thank you.
I think that's great. Thank you so much, Paul, for the pitch. That was great. And thanks for joining us. And if there is no questions, maybe later on we can follow up through the platform. Great.
Thank you for the questions, and thank you for the opportunity today.
Great. You're welcome. Next up, we have Marisa presenting Joba Network. Marisa, please share your screen and let me know when you're ready. I'll time it.
Sure. Can you guys all see my screen?
Yeah.
Okay. Thank you all for, I guess, being part of this pitch session today. My name is Marisa. I'm the co-founder CEO of Joba. We are empowering people for a more flexible future of work. Okay, so our big vision, I've been in the crypto space over the past 6 years or so. And what I found over working in the space is that one of the most difficult things is hiring and verifying talent. Another trend that we noticed is there are tons of digital nomads out there that currently don't have access to credit. And also side hustles and online workers continue to grow in our ever-changing, interconnected world. So we want to solve the issue of hiring, verifying people, using blockchain credentials, and building borderless credit infrastructure to become a fintech of the future. So what we're building is a frictionless future of work platform, which sits at the center of a credit rating infrastructure, hiring and payment service, job marketplace, and verified credentials. And we use blockchain to power all of it. Some of the ways we're using blockchain is zero knowledge proofs for KYC to check work authorization, helping people build on-chain work identity for immutable work records, paying people with stable coins that's fast and low cost in emerging markets around the world, and reputation metrics. And we incentivize users with soulbound tokens and our Joba token. Our live product today is in closed beta. We've been live for about 3 months so far. And here you can see some screenshots of what a profile is, and also our Telegram bot that keeps you up to date on your job application. Some of the blockchains that we've deployed in our partners you can see listed here. But the partner I'd like to highlight today is Kyoto Business Bureau, which is enabling us to recognize on-chain reputation in the real world. So we're making an active effort to work with governments to be able to fast-track visas and be able to recognize on-chain reputation for online workers. Just some more information about our background and our team. I started my career in economics at BlackRock on the blockchain working group. And then shortly after, just joined the largest cryptocurrency exchange in Japan, working across partnerships, business development, product, which then I embarked on this journey with Joba. Our traction thus far, we have actually now over 800 users as we just started our marketing campaigns and our go-to-market. And we've been having lots of users tell us that they strongly need a platform like Joba to recognize trustworthiness for hires, and really a platform focused on reputation and legitimacy, as opposed to a race to the bottom like the other freelancer contractor marketplaces today. Our upcoming roadmap, we have credentials coming up before the end of the year. We're continuing to add more jobs as we work with more partners and implementing referrals and social sharing to start to go all across Twitter and for people to share their Joba links. Our go-to-market is our Genesis campaign. We're currently getting ready to begin. And then, as I mentioned, our community building platform with points similar to Blast and other friend tech platforms that are currently preparing for airdrops. And where we sit as our competitors, we sit very much in the on-chain identity and marketplace category. We see a lot of platforms are tackling the talent marketplace space, but are trying to cover too many areas or cover just simply Web2 areas that are not relevant for Web3. Our key differentiators were Web3 native solution. We're focused on reputation and identity as opposed to the race to the bottom like other platforms. We have real-world partnerships for our users to establish their identity and reputation, and we have a lean, fast developing team. We have a Joba token to make this really a user-owned network, rewards from our protocol revenue, also tokens to be for referrals, fees in the platform, and also fees finally to develop the credit score and allow people to ping our credit score and pay with the Joba token once we've accumulated this database. Our raise today that we're asking is 1.25 million for our safe and token warrant for us to go to market, capture the entire Web3 market with over 30K users, and a further product develop for our premium service to be also expand beyond Web3, go for our Series A. We already have a lead investor secured of 650,000 of the 1.25, so and some additional investors. So currently we're seeking 400,000 for finalizing our round. And I'll go ahead and answer any questions.
Thank you so much, Marissa, for the amazing pitch. In the meantime, we have some VCs joining us as well. We have Jack from 369 Capital, and we have Jack, can you give a small introduction about 369 Capital?
Yeah, and sorry for joining late there. Thanks for having me. So 369, blockchain-based VC, based out of Switzerland. I'm actually based out of New York. We typically write checks from the size of 100K to 250K. And I think right now, our thesis is pretty broad. So I'm pretty much checking out anything that's blockchain related, blockchain adjacent. So things like Joba definitely relevant to us. So appreciate the pitch.
Cool. Thank you, Jack. And we have Luke here from Waterdrip Capital. Luke, maybe a small intro about Waterdrip. Luke, are you with us? Maybe he has technical difficulties. We have Maxim here from Deep Waters Capital. Maxim, maybe a small intro about Deep Waters. Okay. Maybe I'll open up questions from other VCs for Joba. Please, Valentina, Jack, Vincent, please shoot your questions away.
Thanks, Marissa. I can kickstart with the questions. It seems like you have some good traction so far, but what do you think is the biggest roadblock for continuing to grow? Is it users? Is it jobs? Is it partners? A little bit of of all of those. How would you mitigate those?
Yeah, I think the biggest one is ecosystem and trustworthiness and getting jobs on the platform. But I think we are solving those things by already getting more and more users on the platform. So we are going after the more simple side, which is hires versus workers. going after the worker side and really growing that side of the marketplace to then attract hires to come on. And these are all like crypto native folks that know how to use wallets, that are taking various actions like connecting their Telegram and Twitter before they can make applications. So we're really ensuring real users and solving real problems. And I think that some hires are now coming on board to, that we don't even know, that are approaching us to start posting some jobs.
Thank you.
Great. Thank you for the question. Maybe Jack, do you have a question? Since you said Joba is interesting.
Sure, yeah. It's funny because I think when I was actually looking for a job in crypto, I was thinking, I wish, they could even see things like what are in my wallets, what are like areas that I'm interested in crypto, because it's definitely like relevant, especially like when NFTs were getting so exciting, and like, I was doing research on that, and people were like looking for folks researching a specific space within NFTs, and it's actually pretty relevant of like what is in your wallet, or like what are transactions that you have done. I'm wondering if like you guys are thinking of incorporating some sort of like understanding of what has been in their wallet, or something like that that's actually more maybe like protocol driven.
Yeah, I mean, we are basically, I guess we're more than activity, we're kind of focused more on things related to work identity, I would say.
Mm-hmm.
So we have kind of two types of credentials in the platform. We have one that we're issuing ourselves as Joba credentials, which will be based on activity on our platform. And then the aggregated outside credentials, we're planning to support things such as like the Coinbase DID solutions with a verified account and country, so that you can actually post a job that says, I need somebody from this verified country, and they could easily apply. And then a third one that's off-chain data bringing on-chain. So we're working with ZK Pass to see how we can basically bring on reputation from other Web2 freelancer platforms and Vampire Tech them to issue on-chain credentials from there. So I'd say, less so on the kind of, I guess, degen activity. We could certainly integrate like some of those degen scores or other metrics that are out there, but we're really trying to create a comprehensive, more like work identity or like resume, things that are relevant to employment.
Gotcha. And maybe further down that rabbit hole, are you thinking about like also with contract hires, for example, the opportunity to like hire someone who's like technically anonymous?
Definitely.
Or is that kind of against it?
Yeah, definitely. No, definitely. Our platform, all you need to do is like connect a wallet address, and you can decide to be anon or doxed. So you can use your display name, your nickname, or you can sign up with your first and last name. And we give people that flexibility. So
Gotcha. Cool.
Thank you. It was very interesting to hear the conversation on this. And I completely agree with Jack. We really need kind of solutions like this because, a lot of things are happening because of anonymity, right? So it's a good way as well, but sometimes we need to kind of separate the bad actors from it. So this will help. Maybe any other questions from VCs, or we can move on to the next one.
I can ask one.
Yeah.
Nice to see you again, Marissa. Okay, so I'm just kind of curious. A lot of people, like a lot of the early traction that we see in Web3, whether that be DeFi or social applications, comes from people who are really just farming for airdrops. And so I'm just kind of curious, like in this space, how are you trying to get people to sign up, I guess, and incentivize and use the product, maybe in like just period, and then also get the right kind of people to sign up who are actually going to be using the platform as it's meant to be.
Yeah, I mean, I think that with almost any Web3 platform, there's always going to be these airdrop hunters because that's like the best incentive mechanism, and that's where we start. The way that we're thinking about it is really starting with marketers, like ambassadors, referral program, because almost all Web3 projects, DeFi projects, are always looking for ambassadors and people who can refer to bring on more users, right? So we're kind of looking for these types of content creators, ambassadors to really be kind of our first cohort. And then we want to then expand into more technical skills, like, okay, maybe you're a designer, UI UX designer, then maybe like a front end engineer. So we're kind of taking the approach of working with the marketers, which are definitely needed in this space for any project, for you to acquire user base, to, you know, for the attention, and then kind of working our way up. So working through different cohorts of users. And so like the DeFi projects that are coming to us now are looking for ambassadors. So that's probably where we're going to start, is the ambassador marketing cohort, community manager cohort, and then move up. Yeah.
Great. I hope that answered your question, Sebastian. Yeah. Perfect. I think if you're a startup founder, like Web3, anyone who's actually watching this, if you're hiring, please list your jobs on Joba Network. And definitely, and also a fun fact is where she's going to launch on Smoothie very soon, and please go and support there as well. And thank you so much, Marisa, for joining us and pitching today. And we'll follow up later on with introductions.
Thank you.
Great. Interesting. Joba Network and the startup which is going to pitch next, Nolus, featured on Techstars Web3 Digest. So it's very exciting to kind of see these kind of startups being spoken in the space at the moment. And on that note, I'll give the mic to Kemen. Please present your screen and let us know about what you're building.
Perfect. I believe that you can see my screen now.
Yes, sir.
Very nice to meet you. Thank you for the invite. Thank you for listening to me. I'm Kamen. I'm the founder of Nolus Protocol. I have been such for the past 2.5 years. We have started a long time ago to develop this solution. The Nolus Protocol actually is a layer one app-specific chain, which is built with Cosmos SDK. We are trying to address all the major inefficiencies in crypto lending markets: over-collateralized lending, high risk of liquidations, asset ownership. We are doing so with a non-custodial cross-chain money market, which is Nolus. Nolus actually defines a market between lenders who are looking to earn yield on their deposited stablecoins and borrowers who are looking.
Hey, I wanna pause you a little bit. We see your the document, not the pitch. Now we can see the document.
You couldn't see the document?
No, previously we were seeing your Google Sheet. Now I can see it. Now everything is perfect.
Okay,
yes.
sorry about that.
Yeah.
So
all good, no worries.
So Nolus, we actually do borrowing to lending money market between lenders who are earning yield and borrowers who look to amplify their position. And we are trying to solve the issue for borrowers with other crypto lenders, because what usually happens is you provide some collateral to crypto lenders, you get up to 50% out of it, you get fully liquidated after 35% drop of the price. And this is how we solve it. We have a borrower that actually deposits some kind of a down payment to the blockchain. Once he does, he can do in any asset. Once he does, he actually receives an additional from liquidity providers funding in order to take the DeFi lease. Now, both the down payment and the lease go to a third-party DEX, purchase the asset for you, lock it into your lease smart contract. Now, it acts as collateral through the time of the loan. This means that because we use both the down payment and the lease, we get 3 times more exposure at 40% lower liquidation risk. Asset is released after full repayment by the borrower, and after during that time of the lease, you can actually amplify your position or create the so-called yield optimizations by, for example, liquid stake your derivative, you liquid stake your lease position. So you're basically creating self-repaying loans. Now the idea is to have more exposure. You're currently having more exposure with that solution compared to other crypto lenders, but also a lower margin call risk fixed, never-changing interest rate, and also the availability to earn during your amplified position. All that made in a fully non-custodial way, with the lenders, meaning liquidity providers, actually providing stable coins into the pools. So this is extremely important because stable coins within our ecosystem actually act as a buffer in order to do any other transaction. Once you have those stable coins from liquidity providers, you can purchase to the borrower any asset that he desires. We are currently connected to one DEX. We would be connected soon to a second one. The first DEX is Osmosis. The second DEX would be Neutron. But we are aiming to switch that to different EVM chains as well. So use DEXs on that on EVM chains in order to purchase asset for the borrowers. Now we also do have a mechanism where we incentivize lenders through our revenue streams. So every revenue stream actually buys back our token on the open market, refill that incentive pool, provide to lenders. Currently on the protocol, on the platform, lenders earn around 9% APY in stables and another 13 to 14% in our native NOS token. So very shortly, we actually launched in May. We are audited by Oak Security. We've completed a seed and pre-seed round of 2.5 million, led by companies like VCs like DoraHacks, Autonomy Capital, DoraHacks, Everstake, a lot of the validators, Kaizen Ventures, all have been part of our seed round that we call before launch. Now, after we launched, we did another audit with Halborn Security, which is public, which is with high quality. And finally, in terms of launch, we actually launched in June the app. We currently have 6,000 users, 5 million of transactions that we have performed in those 4 to 5 months, 2.3 million of total value locked currently on the platform. So what we are currently doing is trying to amplify our positions in terms of market reach, in terms of going to DEXs that are outside of Cosmos, including EVM chains, and raising Series A so that we are well funded for the next couple of months and years. So any questions would be nice to hear. Thank you for your time.
I can kick it off with questions. Thanks for the pitch. How would you describe the typical user here? What kind of borrower are you seeing?
So far, because currently the market is such, we are seeing DeFi people that love DeFi platforms and money markets. The aim is not to attract only them, however. The aim is to have crypto adoption. And in order to have a crypto adoption, if you go to Nolus.io and launch the app, you'll see many features of any like LvlUp-like banking services. So very easy, very upfront, very to the point app that you need only a couple of clicks in order to do your transactions. You connect your own non-custodial wallet. It could be any wallet. We currently work with Kepler, we work with Ledger, we work with Leap, soon with MetaMask, with EVM chains. So the idea is to attract more users who are willing to use, first of all, be liquidity providers, so they find another way to use their funds to earn, but also take more exposure compared to otherwise with their own funds. And they can do that with Nose, which is safer way because you have lower liquidations and you actually own the asset through the DeFi lease. So you have an ownership rather than if you compare that to margin protocols, futures protocols, you don't actually own the asset. With Nose, you own the asset. So the idea is to attract more users from the DeFi space that love it so far and tried many platforms, but also new adopters to the ecosystem, to the blockchains as well.
Great. Any other questions?
Thanks for the presentations. Actually, it's very nice animation. And how is your plan for native token, and how is the thoughts on the tokenomics?
So our token is NOS. The NOS token, because we're a layer 1 app chain, has been launched together with the app in May 2023. We are currently listed on Osmosis. We are also listed on MEXC. So this is an OTC deal. The tokenomics is fully decentralized in a sense that it distributes to different participants rewards so that they participate on the protocol. The last round that we did at 20 million fully diluted valuation. The current valuation of the company on the open market on those two markets is around 45 million. So currently 2x based on the seed round. The tokenomics is completed in a way so that, first of all, it incentivizes participants like lenders incentive pool. It's 12% of the total token supply going to lenders. We have 15% staying as an inflationary token, meaning inflation giving to validators and delegators on the network as rewards. We also do have part of the tokenomics for seed rounders and investors. We do have part of the tokenomics so that we incentivize borrowers on the other side. But as a layer one, NOS is used for gas. So it has to be launched from day one of the protocol.
Great. Thank you. Any other questions? Sebastian, Jack? Cool.
I can ask one more. Sure, why not?
Okay.
Okay, so I've been thinking about a little bit on like the lending market front. Through as we start, if we think we're like starting to hit a new cycle here, like a lot of these existing lending markets, they achieved product market fit last round, they paid heavily for it in the sense that they had to like issue a lot of incentive-based tokens, and I know that's kind of part of your roadmap too, and I think it's it's probably necessary. Actually, it's definitely necessary, but I guess like, okay, so like Aave, Compound, these other guys, they already have a brand, right? And I know that you've got some differentiating factors, and that's good, but like, I feel like a lot of people will go and it's like, okay, where do I, what's the easiest place for margin that I know has been tried and tested through the cycle and all that kind of stuff. And they might just go there. And then now that you have investors looking at the space who are a little bit more focused on fundamentals, who are like, okay, what platforms are earning the most, like the highest earnings, right? And then they start, bidding up the tokens of those projects or whatever else. Like, how do you feel about that as like a new lending market competing with these other guys who are not going to have to incentivize people as heavily to come use their products?
Okay, two very important things here that I would love to mention. Aave, Compound, they're really great. They indeed have a brand now after the last bull market, but they have fragmented liquidity. This is something that Nolus will never have. We have one stable coin pool filled by people, retailers or institutions, and we can use that pool on any blockchain that we want to use it. So we are cross-chain. This would make us, anyone entering on Nolus.io could make from EVM chain transactions on the Nolus blockchain built with Cosmos SDK without him ever knowing that he's switching those networks. So how do I feel about incentivizing people? I think this is the necessary evil in order to build your brand. I believe for the 4 months of existence and for the 2 months of building the product in a bear market, it has been extremely difficult to attract users, but otherwise we for 5 months have 2.3 million of total value locked and 6,000 users. For me, this is an indication that we have done the web app, the actual interface experience really simple and easy to use for people, and they enjoy it. Now, the question is how to scale, and scaling is done through different cross-chain technologies and blockchains, and adding new DEXs to our ecosystem so that we can offer more and more assets to people to use. Once they learn that it's safer, lower liquidation risk, higher exposure mechanism where you can yield during that time, for a bull market thesis, this would be one of the, let's say, mostly preferred ways to do things on lending markets. Earn more for your money, basically.
Thank you.
Great. Thank you so much, Kemen, for presenting us today. I think, guys, if you want to connect with Kemen, please go to InnMInd, and then you can find Nolus and just send him a request over there. Then you can easily jump on a call and understand more if you guys are interested in investing in the current round. Thank you so much for participating. Next up, we have Pavel Skelin from Fractal Payments. Pavel, hey, can you share your screen, sir?
Yeah, sure. Can you hear me?
Yeah, I can hear you.
Okay, great. Good stuff.
Yeah, okay, cool.
Yeah,
perfect. Yes.
So, hi guys, I'm Pavel, based in London, UK, and I'm building a company called Fractal Payments, and we are building B2B crypto infrastructure for cross-border payments. Now, the problem here is that, frankly, payments suck. They suck for Web3, they suck for Web2. On the Web2 side, they are expensive, slow, and they're riskier. On the Web3 side, they are high friction, incompatible with existing systems, and super, super technical to the point that most businesses and most people around the world, they cannot use them. And we believe that businesses need a better financial system that takes the best of both worlds. In order to address this problem, we are building a cross-border payments orchestration platform that streamlines cross-border payments using stablecoins on the backend, ensuring global compliance and automated workflows. And how does it work and why is it important? It works very simply. If you on-ramp funds in one part of the world and if you off-ramp funds in another part of the world, that payment can be processed up to 6 times cheaper and 3 times faster than processing it through SWIFT. However, moving money is not enough for businesses. Businesses have to put money through compliance and workflows, and this is the solution that we provide as well. We launched in about May/June time in 2023, and we are already trusted by some of the leading businesses in Web3, Decentralized Infrastructure, Orange Tower, Aragon, LvlUp. We have actually now we have processed $3.3 million worth of payments, and we have been growing by about 50% month over month, and the treasury value of our early adopters has already surpassed 210 million. So while we have users that are processing a lot of payments today, we will have a lot more payments volume coming from the same users in the future. We are building a very complex product, and it is a sophisticated payments in infrastructure that has several components: on-ramp payments, dashboard compliance, layer payments, orchestration, off-ramp integrations. And the way how we are building it is that we are building it in short iterative loops to increase the quality of end product. And we can already serve Web3 businesses, and in the future, our goal is to build an on-ramp module that would allow us to have an end-to-end product. And we are also building this product in collaboration with leading payments and tech experts across Web3 and Web2. So we know that crypto is in the bear market, but if you look at stablecoins, they are experiencing a relentless growth of around 80% year on year. Actually, a fun fact, during the 1 hour of this call, $1.2 billion worth of stablecoins will be settled on chain just during this call. So while the rest of crypto is in the bear market, this particular market is very much growing, and stablecoins have kind of hit an inflection point where more people and more businesses they trust this payments mechanism a lot more than they would 3 years ago. Our go-to-market strategy is focused on targeting 2,000 Web3 businesses that have more than 10 employees. Those are already identified and in the pipeline. And after that, we will go towards targeting businesses, B2B businesses in the UK, in the US, just because these are the markets that we know well. These are the markets that have a lot of demand that we currently see. However, we also do not want to ignore the wider market opportunity here. And the wider market opportunity lies in serving geographies and jurisdictions that have been traditionally underserved by fiat solutions, such as Argentina, Nigeria, and India. Last but not least, it is a payments product. And every time you make a payment through Venmo, you invite someone else to use Venmo. And it's the same with us. So, for example, Aragon onboarded onto our platform. They started using our platform for their payments. They started doing payouts to the contractors, vendors, and partners. And some of the contractors and vendors, they signed up to our platform, and that helps us to grow geometrically. Business model simple, a transaction fee of 25 basis points to 50 basis points, and then we will add a further payment fee for more complicated payments flows. For example, if you are sending money from the US to Nigeria, that would be considered a slightly more complicated flow. Now, we are building a Web3 solution on the backend and a Web2 solution on the front end. And our main competitors are traditional banks because they account for 90% of the 22 trillion cross-border payments market. And they charge extremely high fees. They are slow. They cause a lot of payment delays. Compliance is often broken. They don't work weekends, and soon it's going to be Christmas and every bank is going to be closed. Right now, doing this cross-border payments through traditional banks, it just sucks. LvlUp, Wallets, and Wise, they have done great strides to improve cross-border payments process. However, they are limited by the liquidity capabilities and compliance capabilities, and at some point, they still rely on SWIFT. So there is a limit. Yeah.
Yeah, I'll be 5 minutes. You can wrap up. Yeah.
I'll be quick. Yeah. Long story short, we want to compete with traditional banks. They are our main competitor, and they suck. You guys probably know that because you're here. Compliance-focused solution. Currently, we are competing in the Web3 market. However, we are moving beyond Web3, and we are entering the Web2 space. And we are already speaking to large players in Web2, such as companies like Mars. And our users love us because of our compliance capabilities. We help them with compliance, tax, and financial reporting. In terms of the team, I'm an engineer with a background in B2B payments, build solutions used by 60,000 businesses in the past. My CTO comes from expense management space, and our compliance advisor, she used to be ex-senior director of compliance at Barclays, and we are backed by some of the best angel investors and funds in UK, Europe, and the world. You have probably heard some of them. And we are raising 1.5 million with around 400,000 in hard commitments right now, in order to get to 1 million in annual recurring revenue.
Cool. You can keep the deck open. Maybe when someone's asking questions, you can always scroll. Thank you so much. Thank you so much for the pitch, Pavel. Guys, please open up questions, please. Please unmute yourself. Yes, Valentina.
Can you tell us a little bit more about the customer acquisition strategy?
So the customer acquisition strategy, it starts with the customer profile. And the customer profile right now is the following, that it is a company operating in Web3 that has between 30 to 50 employees. Why do we go after these customers? It's because with a large number of employees, they have large number of transactions, and they need to manage these transactions. They also care about cost, and they care about compliance. Beyond that, we are going to go after Web2 businesses with the same number of employees. And one of the things that define our customers really, really well is that they are building default global businesses. And what that means is that they have an HQ in US or Europe, and they are sending money all over the world. And this is where we come in. Now, how do we go after them? Brute force sales, partnerships with infrastructure projects, partnerships with our existing users, using our network effects, the tons of strategies that we can dive in a little bit later.
Okay, thank you.
Great. Jack, Vincent, any questions?
Sure. Yeah. So thinking about like a Web2 B2B business, I'm wondering kind of what are the incentives for them here to join? Because to me, that seems like the hardest part. I understand that you named a couple thousand Web3 businesses. That makes complete sense to me. Can you talk about the logic there for them?
So for Web2 businesses, correct?
Yeah.
Yes. The biggest one is cheaper payments, because, well, for example, if you are sending money to Nigeria, sometimes you are charged to 2-3%, and that is a lot. And we can literally decrease decrease this amount by 10x because we would not be processing payments via SWIFT, we would be processing payments via stablecoin. So the only cost that we would face is the cost of on-ramping and the cost of off-ramping. Now, because of infrastructure such as Circle, who we are working with as a direct partner, the cost of on-ramping for us is virtually zero, and the cost of off-ramping for us is around 7 basis points. So the cost is a big thing. Then
I see.
The other thing is settlement time. So I spoke with Mars recently. I spoke to the president, the chocolate company, and what these guys really care about is settlement times, because SWIFT is very slow, especially if you're sending money to a developing country. And what that means is that payments can get delayed, and the payments get delayed, production line stops, and that costs businesses millions and trillions of dollars per year. And they really care about that, to the point that not Mars, but Pepsi, another company that we all know really well, they're already using stablecoin-enabled payments.
I see, thanks. So to me, the advantages of this specifically apply to like a certain group of Web2 companies at first, at least. Like to me, I'm thinking about smaller companies that are worried about the bottom line, that are also global because the payments are expensive for that reason. So are you targeting in that way those companies that are global and having high payment costs?
Broadly speaking, yes. Not every company is going to be like that, and by all means, like we have to start small. And from this standpoint, we are exactly targeting companies that are default global, as people in venture call these companies, and more and more of these companies, and there are still very few solutions that can address the businesses of address the needs of global businesses. These companies tend to care about their bottom line, and paying 2 or 3% every month just to pay their workforce or to pay their partners. That kind of sucks as well.
Yeah, thank you. It makes sense. Appreciate it.
Great. Cool. If any other questions, maybe we can move on to the next one. Cool. Thank you so much, Pavel, for pitching today, and all the best for your product. And next up, we have Anupam representing Binamite. Interesting is that there is more validation in the product that we were discussing right now, cross-border payments. Anupam, the mic is yours. Please enlighten us with what you're building.
Thank you, Abdul. So we move on from one cross-border payment solution to the other. Let me just share my screen.
I mean, that just shows how much we need those kind of solutions, right? So there's more validation.
Perfect. Yeah. Thank you. So Binamite is making cross-border payments in real time on a stablecoin rail. I would like to start with how we came across with this problem. So I have personally worked with some big Web3 companies like Binance, CoinMarketCap, Cointelegraph, and some big exchanges as well, FMX and all. And every time they paid us in crypto. Whereas I had to actually liquidate all those cryptocurrencies to pay my team. And then when we interviewed a lot of people and a lot of businesses around crypto, working in crypto, they were facing the same problem. And Cointelegraph was facing this problem with their vendors also in Israel, in India, and in other countries where they always wanted to pay in crypto, but on the other hand, those guys wanted to accept fiat. So we built a platform where cross-border payments can be done. The payer can pay, or the employer can pay in crypto, USDC or USDT, and the guy gets money in their bank account directly. The payee gets the money in the bank account directly. So right now we are so once we started doing this, we also realized on the same rail we were able to solve the fiat to fiat problem as well. So anybody can now with Binamite send INR to ZAR in South Africa, or from the US USD to ZAR in South Africa. We are right now live in India, 15 countries in Africa, EU region, and the US. We are also going live in Britain very soon, in the UK. So today's payment landscape, international wires, the speed is slow, they charge high fees. We all know that. I think the previous presentation I was watching, and a lot of this was already covered. But they are not 24/7, 365 days. They don't have crypto payments. They are untrackable. They have hidden costs. The same with the wire transfers, PayPal, and Wise. What we see as a future is for cross-border payments is crypto plus fiat payments will happen. So this is what we do. We put fiat into a stablecoin settlement layer, and then the recipient gets fiat. The payer can also pay in USDC or USDT. The recipient will still get fiat. So our mission is to make Binamite what Swift is for USD wire, Binamite becomes for USDC wire. Right now we are in private beta. We've already processed over $160,000 in volume, and this month in November we have done $28,000 already. This is a slight comparison between Wise and Binamite, how it looks and how much it actually costs to send USD to NGN, whereas $100 would cost 78,000 NGN. But when we send with Binamite, because we are using on-ramping and off-ramping solutions, it will cost us 124,000. The pay will receive 124,500 nairas. So the future, how it looks like right now, the cross-border payments, crypto to crypto is very small, but in the future, when it goes big, the pie of crypto to fiat payments we also see will get much larger with the volumes as we see increase in the future. Yeah, so 87% of SMEs and 81% of consumers actually do check their banks before making an international transaction, and international transactions are slow. Not only slow, but they're also very expensive. With Binamite, we are bringing speed into the transactions. Plus, we are also making them very cheap. And we also take advantage of the arbitrage. In some countries, when you try to off-ramp USDT in some countries, for example, in India and Nigeria, we give all the arbitrage amount to the users themselves. So that not only do they get the exact amount that they see on XC.com, they also get more money as Binamite bonus. So this is our team. We have head of development Gitansh. He's won many hackathons in the past. I've bootstrapped Market Crypto blockchain marketing agency to $1 million in less than 2 years. We have an advisor from Circle. He heads compliance and risk at Circle. He recently, last two months ago, joined us as an advisor, and he's been advising us on compliance all over the world and how do we place our product. This is we charge a very small fees, 1.5%, but with Binamite, the speed gets fast, fees is cheaper, transparency is high, and the users are able to track. We also have an MSB license in the US, Money Service Business License from FinCEN. So we directly report to them for all our volumes and everything. Recently Sandbox also started using Binamite to make the payment to the teams and their vendors. So a lot of their in one, like last week only, in one single day we processed $25,000 of volume payments from Sandbox itself to their vendors and their employees plus their contractors. This is actually the plan. We are looking to right now the corridors that we are targeting is the US plus the EU. The money coming towards Africa and India, which is again the total addressable market is quite a lot. We are not looking at any other markets because we are already live here. We have very good partners here, and we just want to focus on these markets now and increase our volume in these markets. We're looking to raise $1.1 million to onboard 20K users, over 50 million in volume in the next 18 months, and hopefully reach $1 million in ARR. Like I said, Sandbox, Matrix Labs, these are some of our notable users who are using Binamite to make payments. These are some testimonials from our very nice users who were kind enough to leave a feedback. Yeah, that's, if I have two more minutes, I would love to show you the demo very soon, like because our product is live and everybody is using it. Wow, it work.
Okay, while you load that, maybe I'll just drop a comment. Sunil Sharma is someone that I actually met at Token 2049, amazing personality, and I believe that he's actually supporting you from Circle side in terms of getting regulations and legal aspects, compliance and things like that, right?
Yeah, that's correct. He has very great experience in compliance all over the world, and he's been advising us really good. So that's been very useful. So I'll try to send, let's say, INR from India to, let's say, Nigeria or maybe South Africa, ZAR. I'll show you how quickly we are able to send them money. Not only that, we will be able to hopefully get some arbitrage money also. And I'll just enter my account details here. And I'm just going to verify my email very quickly with the OTP. 902. Verifying the OTP. Now I just have to enter the recipient's account details, which I will take from here. This guy. And account recipients. Etsy Williams. Yep. I will not actually make the payment because I'm not sure if I'm using the right account number. So essentially just trying to, we'll try to get the right bank name and the right account number and then send payment. Now the recipient's account, the second step is to enter recipient's account details. And then from India, I just have to make the payment in INR. So UPI is a preferred method in India. So I literally just have to make a 10,000 INR payment from this UPI link and paste the UTR number over here. And that's it. Within the last time I tried to make the transaction between India and Africa, 27 minutes, the money went from India to Africa on a stablecoin rail without the SWIFT network, never ever touching the SWIFT network, fully compliant, regulated way. If you were to take a TransferWise or Payoneer in this instance or use a wire transfer, it would at least take 4 to 6 days plus 5 to 7% in transaction fees. So that's my happy to take some questions.
Thank you so much for even showing us the demo, and it's amazing. I think I would love to kind of hear questions from Vincent, because he's heavily involved in the African fintech space as well.
Absolutely.
Vincent, any questions?
Yeah, sure thing. Thanks for the presentation. I have quite a lot of product questions. So the first thing is that in order to maintain such a quick response and result, do you need to manage the floating count, like a cash liquidity pool in different currency, for example, like NGN and SAR? So how do you achieve this so fast thing? Because I also invested quite a lot of cross-border remittance or payment solution company in Africa, and so far we see the quickest way is that they manage a lot of different fiat cash pool. So just wonder how to do that.
Yeah, so we have different liquidity partners in different jurisdictions. So for example, the liquidity partner that we are using in India, we on-ramp INR into USDC, and then we use Polygon to make the transfer to the US off-ramp partner, liquidity provider, and then that person just liquidates into the South African bank account in this case. So there is no delay at all. Like literally, we are picking up fiat from India and throwing fiat in the African region.
So which means that you give this job to your partners, right?
Yes.
So they're managing the fiat part.
The liquidity
right?
providers, yeah, the liquidity providers in different countries, they all are regulated. We are very careful in choosing our liquidity providers, and they have got licenses in the region. So these are we use them to make the transactions. Yes.
So let me start with the transfer. If I were a user, I want to transfer from Nigeria, let's say, to the United States. So I have some cash in my bank account as Naira, and I want to transfer the same amount of let's say $100 worth of Naira to my sister in the United States. And how can I on-ramp? How do I do it? So I need to transfer my Naira in my bank account to someone else, or how does it happen?
Absolutely not. You just have to go through the process in the widget, and then for you to on-ramp from Nigeria, our partner in Nigeria will provide you with a bank account detail. From there, they will do the on-ramping and literally convert that Naira into USDC, and that USDC will travel to the US and off-ramp.
So which means I transfer Naira from my bank account to the liquidity provider.
To the partner's bank account, to the liquidity provider, yes.
Got it. Understand.
Yeah. I literally just did that in India. So when I on-ramped INR, when I was about to make the payment for 10,000 rupees, that would have actually gone to our partner's account, and then that's the conversion is instant. Like INR to a USDC is just instant, and as soon as we get USDC, we take it to Africa and then off-ramp with our African partners.
Got it. Understand. And also one thing is that the stability of this kind of partnerships, right? So since you don't handle all this like fiat on-ramp, off-ramp, and you rely on the partners, do you see it as a kind of potential risk for you to fulfill? And also how do you secure and how do you de-risk this factor?
So think of these liquidity partners are like exchanges in the local region. So they just literally their job is to provide liquidity to whoever needs it. In South Africa, for example. But yeah, there is a risk factor that they might disappear tomorrow or their exchange goes bust, which is why we make sure that all these liquidity providers are 100% regulated. They have they're reliable, and they have licenses in the region, which is why we partner in all the 15 countries that we've done that in Africa.
Got it. Thank you.
And of course, we want to have more partners so that if one goes bust, then we have someone to rely on. For example, in the EU, we have 2 partners right now, and we are already talking to the third one. It is also to get the best rates for the on-ramping and off-ramping, and also to safeguard us for and de-risking.
Cool. Thank you. I think it's very important to find that balance. You need to kind of find the best rates as well, as long as it's regulated. Yeah. So, but it's always great. I believe that like Vincent, the Adaverse, they are heavily into this space. I really believe that they can actually introduce you to like great partners in the African region as well. Thank you. Any other questions? Well, what about Alex, Peter? You guys, any questions from your end? What do you guys think about the product?
Looks good for me, thanks.
Great.
Yeah, so far so good, thanks.
Okay, amazing. Valentina, any questions?
No questions, but yeah, it looks awesome. Thanks for the presentation.
Thank you.
Great.
Thank you so much.
Great.
Maybe I'll reach out after the call and maybe get more feedback if that's possible.
Absolutely. And also, like anyone who's watching, please feel free to connect directly with Anupam. Just go to InnMInd. His profile is there. Just connect with him and you can have a chat. And if you're an investor, you can actually join him on this current round. And happy to kind of assist you on this as well. And yeah, thank you so much for the pitch.
Just wanted to say that our advisor is participating from Circle, the head of product. He's participating in our seed round. So that amount is committed. Happy to have more investors come in and fill the seed round.
Amazing. All the best to close the round.
Thank you. Thanks.
Amazing. Thank you. Thank you. So, yeah, I mean, finally, we have come to the end. Thank you for all the startups who joined today, VCs, and everyone else who actually watching us on YouTube and LinkedIn. This has been incredible journey, like incredible year actually in Web3, and I'm really optimistic about I think we are already in pre-bull, and I'm actually looking forward for the bull run in the next year, so I can actually finally take some time off and enjoy vacation. So on that note, thank you so much, guys. Have a great day, and looking forward to have you on the next session. See you soon. Bye.
Thank you. Thank you, everyone.
Thank you. Bye.
Bye.